Okay, well, thank you very much, everybody. Welcome to, I'm super excited to be here. As you can probably tell, I actually haven't had caffeine, so because I was so excited to be here today. So thank you very much, guys. And if you don't know who I am, I'm Stacey Acevedo with Income Trader. Some of you may have seen myself or my my brother Mike present as well. We have been in this business for, 30 some years, and we are the premier stock market education company out there. And I'm just going to spend a little bit of time today kind of showing you how to get control or gain control out of the huge profits that are coming out of the stock market. So first thing I wanted to kind of cover is really, you may not have seen us overall, but you probably have seen some of our partners. These are companies that have actually hired us, Income Trader, and said, hey, you guys have the premier stock market education company, and you guys are the best out there. So they have hired us, and we've created programs from them. So you might recognize some of these folks out here when we worked for CNBC and Business Week on the exchange, and Chicago Mercantile Exchange, the largest exchange out there. Also, we work with some of the biggest names out there. Here, Susie Orman, I like this because she says, so many people are in the dark when it comes to money and finances, and it's time to get the lights turned on. And that's what I'm going to do here for you today, is kind of just open your eyes to a few things you may not have seen in the past, or give you a few different tips and clues on whatever money you have, how do we exponentially grow that money? And of course, when we partner up with some of the sharks out there, which we've done, I like this because Kevin O'Leary, smart guy, says, you know what, in order to really be good, I need to partner with somebody whose strengths compensate for my weakness. And many of you guys have been very accomplished in life, but many of you have always wondered, man, how do these stock market people make so much money out there? You know, we hear these hedge fund managers, earn billions of dollars a year, or returns of millions of dollars in their portfolios, in their IRAs, in their corporate accounts, things like that. So I'm going to kind of turn some lights on for you here in the next hour. And this is one of the things I wanted to show you, is one of the reasons why we still do this. So we actually retired years ago, but we got really bored and fat and sat around and didn't do anything. And then some of our neighbors said, hey, will you teach us? And then what was interesting is we saw the kids were so expecting to have money all the time. We said, hey, I tell you what, I'll teach you, but I want your kids to sit in on this as well. Because just imagine if every child, or when we were children, every child didn't have to worry where the next paycheck would come from, if they actually learned how to make a living in the stock market. Think about that. Amazing. Now, also, we want to stay very healthy, because health is a really big thing, especially with this whole COVID. I know people have been home and kind of depressed and stuff. It's been great for stock market traders, though. But I have a really good tip of the day. It says, does anybody know what reduces the risk of kidney stones by 40%? Now, if you do, go ahead and type it in the chat. This surprised me too, but hey, Quarters gave a really good study, and they said that beer helps reduce the risk of kidney stones by 40%. So I want you all to stay healthy. So that said, what we're going to do now is we're going to go take a look at the overall stock market. And no beer until after you look at the stock market. So taking a look, we all know that long term, if you just put your money in, buy and hold, you'll do fine overall. But the problem is the market just doesn't go straight up. Now, recently it has. We've just come out of a 12-year bull market straight up. But what really happens in the market, though, in those, over 100 years, is it goes sideways for a long time, then it goes up and then sideways and up and sideways. So, but you can see if you just buy and hold, you might average 8 to 12%. And a lot of people are really happy with just 8 to 12% per year. But if you knew you could actually get better, or if you knew your money was actually making more than 8 to 12%, but you're only getting 8 to 12%, you go, well, maybe that's, 8 to 12% is okay. Well, let me show you a few different things that you will be able to do by yourself on your computer, just with a few extra tools. In fact, here's a 16-year-old that made $43,000 on some stocks. Look at his returns, 30% return, 42% return. Guys, this isn't 8 to 12%. Here's another one. Here's an artist, a ballroom dancer, took $10,000 to $2 million. I'm trying to show you is sometimes you have to think outside the box. You don't have to, don't listen to the talking heads out there, especially the news, because we know the news tends to put their spin on everything. It's not just the facts anymore. It's all just editorial and opinions out there. So I'm going to show you the facts. And one of the reasons why I love the stock market is because when you take a look at numbers don't lie. And this is the best thing about, this is the one business that anybody can do. I promise I can teach you the stock market if you really want to learn. Now, remember, Clint said, hey, if you want to learn, you got to kind of roll up your sleeves and get in there and do a little bit of work. But I'll show you that it's actually pretty easier than you actually think. In fact, you can do all this by sitting on your sofa. And I have a trading moo-moo. I sit on my sofa every day, type in my stock symbols, hit pause on my Netflix, and take a look at stock and hit buy, sell. And I'm going to teach you how to do the same thing. So let's look at some numbers, though, to see if we can get a difference between the 8 to 12%. So let's say you had $50,000 in an account, maybe an IRA, a corporate account, a savings account, brokerage account, trust account, whatever. Over 20 years at 8%, you get about $233,000. That's not that much. Now, if you decided to do one thing different, just you, now the 8% is you just leaving it to somebody else. The 17% says you decide to take control of your money and you say, hey, if I'm going to work, what's the reason why we work for money? Well, why don't we actually work in the stock market? Because that's going to pay us money that doesn't have any limits to it. The difference on your money now, the exact same $50,000, the exact same 20 years, now your money is at 1.2 million to be able to retire off of. And you might go, that's a lot. That's a really big difference. It is. It's still not enough considering how inflation's going and how things are going. So I'm going to teach you how to improve your portfolio, whatever you have, whether it's 5,000 or millions of dollars, it doesn't matter. Everybody can take advantage of this. So we know that the numbers really prove themselves. So do we do it ourselves or do we pay someone else to do it? Now let's take a look at this. Over the years, and I've been in the brokerage business since 1980. I know it doesn't seem like it's gone by really fast, but I've seen a lot of changes out there. And one of the best things in the business is really the internet and the accessible tools that we have available to us now. When I was a broker in Beverly Hills, I had access to all these tools that now you will have access to tonight at your fingertips, on your sofa, on your brand new iPads if you want. But what this says is if you pay somebody else to manage your money, look at this. The average return in the S&P 500 is about 11-12%, but the average investor only receives about 3% of that. What happens to what your money made and where your money goes? There's a really big disconnect there. And the problem is it doesn't go to your family. It goes to the money managers. Here's some of the top money managers right now, 1.7 billion. This is their annual salary. Every year they make this. Actually, last year they actually made more than this. Now, those are the top ones. These are the average money managers, the guys that just do average, that underperform the market. They still make $500 million a year off of your money. So yes, somebody is getting rich off your money. It's just not you. Now, what's interesting is these money managers are employing the exact same strategies that I'm actually going to show you today. And you go, hey, that's actually really doable. I could learn that and I could do that. And I promise you, like I said, if you want to learn this, we can teach you. And I'm telling you this because I now live in Florida. When I initially retired, I was in Seattle. Not a fun place to retire, so I moved to Florida. And what I noticed is a lot of the elderly, 65 and above, which is Florida, they all still have to work. They can't even afford to retire, or really only about 2% of the population today can really afford to retire and stay in the lifestyle they become accustomed to. Because think about it, when the average person retires, where's more money going to come from? You really can't create more money when you're retired unless you employ a new business that doesn't have any employees, any boss, any overhead. You don't have to have any supplies. It's just your computer and the stock market. And you can take what your assets are and you can start building those assets so you never have to worry about outliving your money, which is a really, really big concern. In fact, Warren Buffett said, you get a lot for your money when you hire a professional like a dentist or a plumber. But really, when you hire a professional money manager, you don't really get anything for your money. And so all that money that you're giving away, their huge salaries every year, that belongs to you and to your family, not to the professional money managers. And the beauty is the tools. I'm going to make this really simple for you to learn this. I'm going to give you 4 simple steps. And some of you have seen this before, so it might be a great refresher, or you might just go, let me just see if this really works. But we can see from last time how well this has worked. So let me just show you the 4 steps here. Peter Lynch, one of the top money managers on Wall Street, he managed the Fidelity Magellan Fund for years. He says the amateur investor, which is us, we don't invest institutional dollars. We have numerous built-in advantages. What he's saying is we can actually outperform the markets just by a simple step, which I'm going to show you here. So if you're taking notes, please write down, there's just 4 simple steps you have to learn. First one we're going to take a look at is before you invest into any company whatsoever, because this is your money you're putting into the stock market. Now, some of you might say, I already know the stock market. Well, maybe you pick up one pearl or piece of wisdom right now. So the first thing we always take a look at is what's the quality of the company? You need to make sure before you put your money at risk, because there's some really, really good companies out there, but there's also some really bad companies out there too. So if you want to invest the professional way, the way professionals put money at risk in the market, you have to follow these 4 steps. And we first of all look at what's the quality like? What are the fundamentals of the business? So we're going to look at all this. We're going to look at the balance sheets, the cash flow statements, the earnings velocity, the management ratios, analyst estimates. It's going to be really fun, right? Now, did I lose anybody looking at this going, I don't want to look at this? Well, guys, you have to know what this data says, because if you jump into a stock because of excitement or because of a piece of news without really knowing what you can do, that's how people lose money. If you've ever known someone who's lost a lot of money in the stock market, it's probably because they didn't follow these 4 simple steps. So yes, we do have to look at the fundamentals, but the reality is this is 2021. We make it very simple for you. Mike Koval has created this website that's been around since 1997, and this helps analyze stocks based upon the professional criteria. In fact, of all the professional criteria used, we've taken the top 17 criteria, the most important analysis that Wall Street looks at when identifying a stock, because we want to see what are they, or do they have profits? Do they not have profits? Are they growing in sales? Are they decreasing? So we have to look at all this before we even consider entering a stock. So what we've done is we've taken the top 17 criteria and we've broken them down and showed you what these numbers are for the stock. Now, what this is saying is, here's some of the criteria, your valuation, your growth rates. Is all I want you to see right here in this slide is we take your company's numbers and we're going to compare your company. Maybe you're looking at maybe United Airlines, an airline company. We're going to actually compare your company to every other company in that stocks industry, the entire sector of the market and the entire marketplace, to see if your stock outpaces all other companies in that sector and the marketplace. So we're going through a very, very stringent requirement, 17 criteria, and we compare it all to the stocks industry, to the stocks sector, and to the entire marketplace. This would be considered like if you're buying a house and you wanted to do a house inspection, you come in, you do the inspection, you look at all the plumbing, the roofing, the electrical, all that stuff, and you bring the appraiser in and they tell you what the valuation is. So we're taking a look to see how high quality this house really is. And so if you see a lot of green, that's really, really good. The good thing is you don't have to know what all these mean, because we actually do the work for you. And that's the beauty of technology today. 20 some years ago, this didn't exist, but this is showing you where here's a weakness on this particular stock. It shows you this stock is underperforming the entire sector overall. But for now, let's just look at the big box here. So before we saw a green box, here's a company you might recognize. This is called General Electric. Now, just based upon not what you know of the company, but what you see here, the fundamentals of this company, what do you see? A lot of green or a lot of red? because this is pretty much very active. I just took this screenshot not too long ago, and it's showing you the underlying foundation that the company's built on is really red. I mean, it's not that good, comparatively speaking, to other choices out there. And if you're going to put your money at risk, we always want to choose the safest possible stock out there, because we know there's tremendous risk in everything you do. The number one thing you could do is, if you follow your list of rules, like you're driving a car, there's a very specific set of rules you use so you don't get in an accident. Same thing here. In this example, we look at GE and we see that, man, there's a lot of red here. Should we look at any more at this company? No. We don't want to look at a company unless it is the best of the best of the best. You hit one click, this will scan thousands and thousands of stocks in 1 second and give you the top criteria out there. So here we have two stocks. Just based upon what you know right now, past 3 minutes or so. Here's one stock. This is ABBV. It's a medical stock. It has lots of green in the quality of the fundamentals. Or here's another stock, General Electric, that has lots of red. Now, the average person will go, oh, I know GE, I'm choosing GE. But the reality is, you're educated investors. You've been educated now for about 10 minutes, and you already know fundamentals are key. They are absolutely one of the most important things for the conservative investor or trader out there. So if you had to choose, here's two companies. Now, we make this easy for you, because someone might be saying, hey, I'm colorblind. I can't see red from green, and that's okay. The creator of the website made it really easy to understand. If this passes the top criteria, 14 of the 17 most stringent requirements, we're going to give you a happy man. This is a happy, wealthy man right here. It's called a good stock. Now, if the fundamentals are not good and they don't pass the criteria, then we're going to show you actually a sad man. This is a poor man, because this guy lost a lot of money because he invested in a company that didn't have a high quality. So ultimately, we do the work for you. We're going to look through all these ratios, take a fine-tooth comb, look at all of this data every single day, and we'll show you within a second, it's a good stock or not good stock. Done. So now you don't have to spend your time saying, oh, is Starbucks a good company? Is McDonald's a good company? Is Tesla a good company? Now you can just go to the website and go, is it a happy man or is it a sad man? Done. So now, if we have two choices, this could be really tough. If you had to choose one of these stocks to put your family's life money into, of course, we're going to choose stock number one. Now, you may not even know what these companies do, and that's okay, because we're not going off of what you know of the company, because what you know is probably not the correct data to actually particularly evaluate a company the way the professionals do. So based upon the professional analysis, we see that this company that has a happy man is by far, hands down, a stronger candidate to invest into. So wouldn't it be great if you could just say, well, hey, how about if I could hit one button and search all thousands and thousands and thousands of stocks and says, just give me only the best of the best of the best stocks. Only give me the cream of the crop. I only want to look at the best. Why would you spend your time looking at all these other stocks that are very poor fundamentals, that one piece of bad news comes out and it can crash the whole stock? Actually, today's a good example. The past week, the market's been pulling back a lot, and I'll show you this live. This is why you always want to make sure you stick with very, very high quality stocks here. So in fact, in this situation, you click on, good stocks, and I'll do this live if you want. If you're interested, I'll do it live today and see what some good stocks are. But what this shows you is, if you click on good stocks, it says here's some companies that are actually high quality stocks. Now, guys, this is just step one. Let me go to the website, our website live, and find out, I think this is what I want to go to right here. I wanted to go to our website to find out and do a search for you right now. Okay, so here is our website, and I wanted to take a look. Let me just move around some computer information here. And I'm going to hit a stock scanner. On the stock scanner page, it says if you click on this right now, good stocks. So take a look at this. I got to sign back in. And what this is going to show me is who, as of today, are the best of the best stocks out there right now, the highest quality stocks. Now, here's a couple of the highest quality stocks. We can see as we scroll down, So these are companies you might recognize, you may not recognize. So this gives you a pretty big list. In fact, if we go to the very bottom, we show that there's 261 stocks as of this morning that actually passed the highest criteria. Now that's 261, which means there's thousands that don't pass. I wonder what's in your portfolio. So, and you can take a look at that later on tonight if you want, when you get into after the website. So taking a look at that. Now, so step one, you always make sure it's the highest quality. Step number two is it on sale? Folks, I like highest quality possible, but I also like to get a good deal. I use coupons. I love getting a good deal, even though I don't need to. I just like the fact of getting a good deal on coupons. So let's take a look and let's try to buy stocks that are on sale. So high quality stocks that are on sale. This is like going to Saks Fifth Avenue or Nordstrom's and saying, I want your most expensive things on the sale rack. I want the 90% off sale rack. I want the highest quality on sale. So what we do is we use the margin of safety. And this is the discount cash flow method. And this really just helps you identify stocks that are really high quality stocks that have great earnings, have great sales, not just now, but also in the future, based upon their earnings and sales. What's their price valuation now? Are they overpriced or are they underpriced? We all know companies out there that are severely overpriced. GameStop is a really good example. Tesla's a good example based upon their actual value. So we want to take a look at stocks that have good fundamentals and a really good valuation. In fact, Warren Buffett, if you've ever read any of his books, he teaches this, he talks about this. And if you wanted to actually do this yourself manually, here's the equation. You can actually write this down, and I'll test you on this after lunch if you like. Write down your equation. It's called the margin of safety formula, and it really helps you buy stocks at a discount. In fact, this methodology on investing money, hedge fund managers learn this when they're taking their master's and their doctorate degrees at some of these major institutions. They all teach the discount cash flow, the margin of safety. So what we're taking a look at is saying, let's say here's a stock, for example, right here. Let's see. This particular stock is $37, but it says the fair value of the stock, which is the Warren Buffett's discount cash flow method, says your stock is really worth 70. Now it's only trading at 37 right now, but it really, based upon its fundamentals and the discount cash flow, it should be worth 70. Folks, is that good news or bad news? That is good news. So we take a look at the stock and we see, sure enough, it was around $37 a share. And sure enough, that stock slowly had its nice move up over several months on its way up to 70, up to $56. Now, oh, here's a $9 stock, $9. Some of you guys go, stock market's not for me. It's too confusing. I can make it very, very simple for you. This is a $9 stock. Who can't afford a $9 stock? I mean, everybody can. Just don't eat lunch today or dinner and they've got $9. You can buy your stock. Guys, there's no commissions. It is free to invest in the stock market. When you're trading stocks, no commissions whatsoever. So it's great. You put in $9 a share, whatever that grows, then that's your profit. In fact, it would be great to teach your kids about money with stocks, because aren't kids always on their phones and their computers looking at everything? How about if you taught them how to look at stocks and how to appreciate how money actually works and how money grows? Most kids we know are on the computers and technology, platforms every day, 15 hours a day. Why don't we put a small slice in there saying, hey, I'm going to buy 10 shares for you, spend $90, and let's see how that grows. You want allowance? Okay, you do some stock homework, and then we'll see how that works. So let's take a look at this. Stock is $9 a share. Warren Buffett's fair value, the discount cash flow, the margin of safety, says your stock's really worth 15. Now, good news or bad news? That's really good news, yes. So let's take a look at the stock. Sure enough, $9, moving on up to 12, on its way up to the $15. The point is, this is kind of like, I know the housing market's really, really hot right now. Our global headquarters is in Southwest Florida. And it's kind of like if you said, I want to buy a house, but I don't want to overpay for the houses. Only give me the highest quality house that is at a short sale value. That's what we're doing. We're giving you a list of all the highest quality stocks that are at short sale values that say these are great buys right now, and they should continue their increase. They're not overbought like the entire market is right now. So this particular stock, as it continued up, we already know that we must follow step one, which is high quality. So has great fundamentals and it has great earnings, and it's on its way up to a much higher valuation. All right, so let's take a look at this one because it also works in reverse. In fact, here's a stock, and say it's $50 a share, hypothetically speaking, for the educational purposes of the website. And Warren Buffett says, gosh, you know what? Your stock is really worth about 29, not even the price. You go, oh, no, I got some sort. My stock is going to do really well. They said they're going to have great contracts. Folks, we don't listen to the news out there. We look at the facts. We look at the numbers. I love this business because you don't have to listen to someone's opinion when it comes to your own money. You can actually look at true factual numbers and see, is this correct or not correct? And if we look at this, it shows this company is overvalued. The price of the stock is $50, but the valuation is really $29. Why would you overpay for a stock? In fact, this stock continued, it was at $50, and because the value was $29, it actually continued all the way down to its value, to its valuation and lower. And on top of it, of course, the fundamentals were very, very poor to begin with. And most people go, hey, I use this company. Why is it dropping? It's dropping because the reasons a company should increase in value wasn't there. People bought it because of emotion. Folks, we're trying to remove the emotion and just bring in logic here. So let's take a look at one more. Here's a stock at $44, and I wish the stock was still $44. It's taken off now. The fair value is $110 a share, and let's take a look at this. Now, so here's a stock, $44. Fantastic fundamentals, the best of the best, the cream of the crop. This stock went from 44 zip all the way to 160, and actually has still continued even higher because the fundamentals are so incredibly strong. So we know we want to have a high quality stock and you want to buy it on sale. But you might say, how do I find the stocks that are highest quality on sale? Well, of course, we have a search for it. The creator of the website, my brother, is really lazy actually, and smart, but energy efficient, let's say. He said, you know, how come I want all this data, but I don't want to have to go to 25 different websites and look through this and go to the Bloomberg machine. So he actually created this website almost 30 years ago and said, how do I get all of this data into one place? I can hit one button and poof, here comes all the correct data based upon the fundamentals as of this moment in time. So this says, if you want to find a stock, highest quality stock out there, and it's on sale today, what would be good? So if you click on undervalued stocks, if you want, I'll do this live and we can see what stocks might look good here. So in this case, it's going to show you whatever stocks, the highest quality, which is a happy man saying good stock. And then it shows you your companies here. Does anybody want to see me do this live? I can go to our website and take a look and see what undervalued stocks are there. So let's take a look. Let me go to our website again. All right, perfect. So let me go back to our stock scanner, the very top of the page, stock scanner. There's a stock scanner page. And I'm going to click on undervalued. Y'all see where I'm at? So if I click on this, it's going to bring me, as of today, this morning, the number one stocks out there, the highest quality, and that are on sale. Now, I'm just looking for a stock that's in a nice overall trend that might look good. Okay, let me just go to second page. Oh, we only have 100 and look at that. We only have 116 entries. Wow. Out of the thousands and thousands of stocks out there, only 116 today are the highest quality and on sale. So let's see if we can find a couple of these. One that looks really, really good. I'm looking for a really nice, this is a good trend. Ooh, I like this one. Okay, let me click on this one, STLD. Earnings come out on April 19th, which is wow, look at that trend. Oh, I like this one. So here's the company itself, Steel Dynamics. Let me blow up the screen for you. Wow. Beautiful, beautiful. Look at that trend. Now, our market has been going up. We've been coming out of a 12-year bull market, but recently we kind of hit a high. In the past week or so, we've been having some lower highs, lower highs, lower highs. But this stock looks fantastic still. Stock is at 40. Not that I'm giving recommendations. This is for educational purposes only. Of course, I don't give any advice, even though I'm a licensed money manager. I don't give any advice on these webinars. But let me just look at this. I mean, I could buy it in my own portfolio. So the stock is 41. Warren Buffett says the stock is worth $44 a share, so it's underpriced, and it's good fundamentals. Almost good is like a B+++. The creator of the website never really got A's in anything but welding and machine shop, and so he said, well, a B+++ is still really good. So this is a good-looking stock, overall uptrend, beautiful, and it's undervalued, and it's on sale. They're like, right, this is exciting. Now, what happens if, in fact, it shows you right here, every single time that this stock moves, it says average upside move. Every single time this thing hits a low and bounces up, it tells you this stock tends to move about $3.76. Wow, that's pretty cool. About every 10 days. So what if you actually got into this stock and said, okay, I'm going to buy the stock, or I'm going to control the stock? What if you just got in and said, okay, the average move is $3. What if I just go in and just get a $1 move? Just $1. When it hits $1 move, get me out of this. Folks, if you're controlling 1,000 shares and you just asked for a $1 move, you just made $1,000. Now you're still sitting on your sofa in your pajamas. You hit click, find the stock, undervalued, good stock, buy. Went up $1, sell. Done. Oh, I should have some coffee. It's early in the morning still. That's how you trade the stock market. Now, we're doing this because we're using factual numbers. We're based upon the patterns of what's in this actual chart. We've taken the website and we've broken it down so it's so user-friendly. The average person can actually use this very, very simply. You can go to one click, good stocks, undervalued, found it, but I'm not done yet. That's only 2 of 4, so we're only halfway done. Okay, step number 3 is you've got to buy in the right neighborhood. This is really important. I know a lot of people who invest in real estate out of state, and they have no idea what the neighborhoods look like. There's a neighborhood down where I live, and I live on the water, but I live next to a neighborhood that is it should be in the police precinct district because the police are always there. So it's really important that you buy in the right neighborhood. And same thing with stocks as well. And think of you buying a house for investment purposes. You want to make sure you buy the cheapest house in the best neighborhood because it has the most room for growth overall. So this is a universal fact. Everybody knows you don't buy a great house in a bad neighborhood. We know that. So here's a couple other universal facts. Everybody knows the 5-second rule means it is still edible. In fact, I just did this about an hour ago and I'm still alive. I'm okay. So 5-second rule, sure, it's edible. And does anybody know this? When we were kids, now I'm saying if you're over, I'm 14. So anybody who's in the 40s or 14s, what was your number one sports drink when you were kids? Universal rule. We all drank out of garden hoses, right? After the dog did. Sure, then it was our turn. And so we grew up that way, not on bottled water or bottled Gatorade. And universal truth number 3, if Flavor Flav can find love, so can you. I know this is Valentine's month and it's February. If you have a high hopes to find someone out there, Flavor Flav, I actually met him before. He's a really funny guy. And I saw him in Vegas when I came down. I said, hey, Flavor Flav. He had that big clock around his neck. And I said, I want to teach you about the stock market. And he goes, girl, I'm rich. I said, yeah, but that's not going to last for long, I think. He goes, don't worry, I'm going to marry rich. And he was such a nice guy, but you know what? My point is universal truth. Everybody can find love. Okay, so let's go back to the good neighborhoods. We want to find a really good stock on sale, but we'd like to find that stock in a really good neighborhood, that the whole entire sector of that stock. So if I was looking at United Airlines, I would like the entire airline industry heading up, or the transportation sector headed up. That's what we're looking for. So here's a sector of consumer staples. The entire neighborhood of consumer staples is trending down. So do you want to find the best stock when it's headed down? No. People go, maybe that's good. No, because it's not done dropping yet. It could drop still significantly further. You never buy a stock when it's trending down. In other words, you don't catch a falling knife. No, wait for it to stop, prove that it's done that, and then move its way up. Now, if you are very good at finding stocks headed down, don't worry. I can turn you into a very wealthy person, because as a professional money manager, we actually make money when the stocks go up, of course, and when the stocks go down. Money, there's a lot of money to be made, and we can actually show you that if you happen to be the type of person that every time the stock you get into it, it drops. I'll show you just how to change your strategy. You can make a lot of money off that. Now, computer technology was doing great up until about 2 weeks ago. About 2 weeks ago, it topped out. The NASDAQ, it was so overbought, bam, it started immediately slam, slam, slam. And today, it's just crashing down today. It's beautiful. Now, I say beautiful because as a trader or money manager, we make money as it drops as well if you change your strategy. But this isn't the best overall sector because it's still headed down. So let's look at another one. Medical. Kind of going nowhere. Why do you want to put your money into something that's going nowhere? Make nothing. It's going nowhere, going nothing. Yeah, no. If you do that, you must implement another strategy to create income. So let's pass on that. Ooh, utilities. This one looks good. Now, utilities is good because even if people are unemployed and they can't afford a lot of things, they're still going to pay their electric bill. And so utilities look pretty good. So we know the entire grouping of utility stocks are heading up. Wouldn't it be great if we could find the safest stock, the most fundamentally sound stock in that sector that is the best of the best in the neighborhood heading up? We click on good stocks, and it's going to show you, here's a few of the stocks that are actually fundamentally stellar. They're very good numbers, good patterns, good history, good performance overall. So we take a look at the entire sector. Now we want to look at what's called the FV, the fair value. Is the fair value below or above the stock's price? You want the valuation to be higher than your stock's price. It means your stock has a reason to increase to that valuation. And it looks like there's two stocks that actually are undervalued here that are also good. So let's take a look at one of the stocks. This particular one, the stock is actually moving up. The sector is moving up, and it's undervalued. Let's take a look at this. Okay, so it's a utility telephone company. And sure enough, here's the entire neighborhood of the grouping of the stock. Here is, let's see, here is one of the best stocks in there. Good neighborhood, fantastic stock, undervalued, so it's on sale, and the stock is actually trending up. That was within pretty much one click. Now, this is something that's brand new that Mike Koval just put on here. This is amazing. Write this down if you're taking notes. Stocks follow their earnings. Very, very important. This is showing you the major sectors in the U.S. economy. What are they expected to perform this year, and what's the performance next year? This is really amazing. Look at this. So it shows you like the finance sector, earnings per share, growth 8% this year, aerospace 7%, consumer staples 13%. Look at this. Basic materials is expected to grow by 42% this year. And then next year is expected to grow by 8% next year. So sure enough, we see if we scroll down again, auto, trucks, and tires expected to grow 40%. Maybe you might have money in some of these other sectors that are slightly underperforming the choices that are out there. Now, as an investor, what's really important is saying, what's the highest quality? What are the facts? No emotion. What has the best performance, and what has the projection of actually heading up? And then how do we analyze that every day within about 2 minutes or so on your smartphone and go, I'm fine. You stay in there. So how many of you think, I'm kind of getting this? This is a lot easier than I thought it might be, because this is very, very learnable skill. If you're taking notes, write that down. Learnable skill. Okay. So some of you might be going, yeah, I get this. But the problem is the market 12-year up, straight up now, is starting to just kind of roll over right now. We are at a slight of a tipping point. We are overbought, yes. But because the Federal Reserve has actually said we're committed to pumping money in the U.S. economy, our market, we might take a correction, but it may not be a huge, if it's a crash, we'll probably still be okay for those who learn how to trade to the downside. but maybe the market just kind of goes sideways for a couple of years, just nowhere. You go, crud, now I'm super excited to learn the stock market, have my money, make money where I can retire and be a millionaire, and the market just goes nowhere. Well, that's okay, because professional money managers still look at high quality stocks on sale in good neighborhoods, but they also know how to implement a very important strategies, cash flow strategy. And think about it like this. If you had a house, and I invested in real estate, but I invested in real estate and I had many houses, and the market went sideways to down, and I couldn't get out of any of the houses. So what do we do with our assets while they're not moving? You rent out your house, you rent out your assets on a weekly or monthly basis. Well, did you know if you've ever rented out a house or a room on a weekly or monthly basis, did you know you can do the same thing with your investments? The exact same thing. Now, if you have never done this and you have a professional money manager, good chances are they are doing it on your money and they're keeping your rent. Can they do that? Of course they can. It's called money management, especially mutual funds. So we take a look at this. This is called covered calls. Again, if you're taking notes, this is amazing. You must learn this. I don't care if you are 100 years old, you are qualified to do covered calls, which just means you have a stock. Somebody is willing to pay you an income, a monthly rental income, because they want to buy your stock if it hits a high price. So you win. If your stock goes up, someone's paying you rent. If the stock goes up, then they're paying you to buy it at the high price. You know, it's fantastic. It allows you to create an income off of your assets as they stay in the market and grow. You can still rent those out. How do you think these money managers make $1 billion or $500 million a year off of your money? They're taking your assets and they're doing this strategy. They're renting out your stocks on a weekly or monthly basis. I do it on a weekly basis because I got to be honest. Do you have any idea how much it costs to just look this good? I need weekly paychecks. So I rent out my stocks on a weekly basis because every Friday at the end of the week, the rent is done and then boom, I get more rent coming in. So another whole week's worth of income coming in on my assets. So Wall Street Journal actually said, who says you can't make money off of stalled stocks? Guys, if your stock isn't going anywhere, but you love it or it's a good quality stock, you don't have to get rid of it. You have to just change your strategy, change your thinking to how professionals, how would a rich person, how would a professional money manager make money off this? Well, they'd sell covered calls. It says covered calls are regularly used by individual investors. In fact, this is probably the number one strategy I would suggest everybody to learn because it's so simple. It requires, there's no additional risk because you already have the stock. Now we're just saying, hey, give me an income off of my stocks. Let me show you one of our searches here. This says strong covered calls with strong stocks and good fundamentals, which means all of these are undervalued. So these are stocks, high quality on sale that you can rent out once a week or once a month. Now, let's take a look at some. Here's a stock, $6.74. Now, the key is if you're writing notes, you must buy 100 shares of stock here. Must buy 100 shares of stock. So in this case, you're going to have to spend $674. And it says you could sell the March option and you get about 9% on your money in 50 days. So this one's a little bit longer. It's about a month and a half or so, but you still get 9% in a month and a half. If you did that 6 times a year, you're significantly beating all other money managers out there. So let's take a look at another one. A PHM. This is actually a home building stock. Right now, real estate is skyrocketing in many areas. And some people go, I can't afford real estate. It's going, it's out of control. Okay, then invest in real estate stocks. Because these real estate stocks, you can actually buy the stock and rent out the stock. You don't have to have a real renter worried about house repairs and property taxes and all that stuff. You can actually just buy the stock for $26.71. The stock actually pays a dividend, a 5% dividend per year while you're holding it, and you can rent it out. And this is about 4% every month. 4% by owning not real estate, but the real estate companies. They pay you a 5% dividend and you get a 4% monthly income off that by doing covered call. You go, well, that's just a fluke. That's just a good month. Really? Let's look at the month previous. The month previous, it was 4.43% that month. The month previous to that was 4.51%. So anybody see a pattern here? What it's saying is this high quality stock that's on sale produces about a 4% monthly income to you in, let's say, rental income that you can actually take out and spend while it's growing long-term and pays a 5% dividend. Mic drop if I had one. I don't have one right now. But this is the beauty of covered calls, folks. And you go, how do I do this? Oh my gosh, what's going on? It's a very, very, very learnable skill. Now, Mike Coble has just released a training program on covered calls. And how do you actually find it? How do you get started? What's an option? How does an option work? How do you find the stock? How do you sell that covered call? He goes through, it's very, very, very extensive, the most extensive I have ever seen in the industry, entire program on covered calls. How do you find the great stocks? Click, got that. How do you know which covered call? Should I sell weekly? Should I sell monthly? Do I get the dividend? How do I do this? If I get upside down, how do I fix this? So it's fantastic, very, very detailed on showing you, because if you have a stock, or maybe you have mutual funds, or maybe you have insurance or annuities that don't really pay you anything. By the way, any insurance product out there, always get 3 different points of view from someone who's not earning a commission. We don't have any things that have commissions on them at all. And so you want to make sure before you buy anything, you want to make sure you're asking people who don't earn commissions, because they'll give you a true representation of if it's a good product or not. Because some are great out there and some are not great out there. So taking a look at high quality, on sale, good neighborhood, and step number 4 is the right time. We all know you have to wait for the right time. And this is probably the hardest because you have to be patient. Who out there is patient? I'm about the most impatient person out there. I want everything yesterday. But, and this is why I love the stock market, because the stock market, if it's open, there's always an opportunity to make money. If I can sit at my computer when the market opens at 9:30 Eastern, if I can find one stock moving $1 for the day, I go buy. Hits $1, bam, sell. I'm out, done for the day, done. Now, yesterday I made, I don't know, 14,000 or something in the first hour. So it's just, that's how you trade the market. And I go, I can retire for the rest of the day. It's now 11:30 or 10:30 in the morning, or I could trade more, or I could go do something else, or go do volunteer work, or hang out with family. And that's the beauty of the stock market, folks. Some days you might just make $1,400 or maybe even $140. Maybe you don't make a lot, but my point is you can do this at nighttime when the market's closed. You come home from work, you sit on the sofa, you find your stock on sale, good timing, and you place your order at nighttime, actually. This is a fantastic strategy for anybody who is still working even. So let's look at the timing factor. This is super, super, super important, because we know you can buy a great house, but you have to wait for the timing. So we take a look at our stocks. Rule number 1 is, I wanted to look at covered calls, actually. Let's go to the website real quick. I mean, do you mind if we look at a live covered call search? So let me go to the stock scanner page, and I'm going to look for not just covered calls, a stock you can rent out. I'm going to look for the stock you can rent out that has the highest fundamentals, very strong, and the stock is on sale. That's what I want. I want to get everything on sale if I can. Okay, so here's a good one right there, BMY. Okay, so this is Bristol Myers Squibb. Now, here's the stock that's kind of just going at average, just kind of sideways, overall average. Then we take a look at this. The stock is actually trading at $60.52 right now, but Warren Buffett says the valuation should be $87. This is a good stock. It's undervalued. It's on sale. Fundamentally fantastic. It's in the drug industry. You guys know anybody who takes drugs? I mean, legally. So Bristol Myers, I live in Florida. I used to volunteer at the hospital. I used to see Bristol Myers all over the place. So this is a good stock, and it's just kind of hanging in there. But this And it shows you every time that this stock gets a buy signal, which I'll cover in just a second, the average upside move is about $4.44 every time it moves up. And that takes about 7 days. So 7 days. So every 7 trading days, this thing moves up $4, and then it hits a top, and then every 7 days, it tends to move down $4.38. Average downside move, this is right here. Downside move is $4.38. About every 8 days. If you had access to this knowledge and go, okay, I see it, timing says time to buy, you get in for your $4 profit and you exit. And then as it drops $4, did you know you can take off your bullish hat, put on your bearish hat, and make money as it drops $4? So this is all stuff. If you didn't know this is all stuff, how people make a living in the stock market. But Bristol Myers, let's take a look at this. That was a good cover call candidate. That one produced, let's see what the rate of return was. I think that was about 2 or 3%. Let me go back real quick here. Okay, so Bristol Myers, this was, where did it go? Here we go. Oh my goodness. So look at this. Here's the BMY right here. It pays a dividend of 5.6%, 16%. That's just to hold the stock. You get over 5% a year. That's just to hold it. Then, in this case, it gives you, it's for the next, about 3 weeks or so, you're going to get 2.49%. So you don't quite get 4% with this one. You get 2.49%. That's still pretty good. Because if you multiplied let's just say 2% a month times 12 months, that's 24% a year plus the 5% dividend. And how do we find that? Click, click, done. We know it's high quality, we know it's on sale, and we know it's a good performer out there. Now, are there guarantees in the stock market? No, there's never guarantees in the stock market. Is there risk? Yes, there's risk. Might you lose money? Yes, you might lose money. This is why you must follow these 4 steps really, really, really specifically. You must have discipline here. And we always look at rule number 1, which is Warren Buffett. And he says, hey, don't lose money. Yeah, it's a lot easier said than done. And I love this, but I do like this particular rule, the next one that says, if you're looking to buy a company, buy a great company, strong fundamentals at a great price on sale. And he says, follow the big guys with specialized computer tools. That was that search I just showed you about the sectors. What sector is supposed to do best this year and next year? Folks, I actually buy sectors and I rent out sectors overall on a weekly basis. It's not just one stock, it's an entire grouping, the best out there, and I rent that out. And that's for my really, really conservative investors. My more aggressive investors, I'll just go in and buy the stock and ride that up 4 points or 5 points or whatever. So let's take a look at this. This is a timing issue. And again, takes a lot more discipline with this one. So let's take a look. All right, our timing. So first thing we have to look at, our website makes it very, very simple for you. And the first thing we look at is, this is called the stock's price chart. You see these little dashes. This is each 1 day of movement on the stock's price. When you see a green arrow, that means the stock has just moved above the stock's 30-day moving average, and it's now in a bullish tone or a non-bearish tone, let's say. So you get a green arrow, that's the first buy signal. And you go, well, how long do I hold on to it? Where do I exit? Well, when you get a red arrow saying it's now no longer headed up, then you exit, because we don't want to hold on to it while it's dropping. You want to exit out, step out. That's the first arrow you look at. The second arrow you look at, this is called the MACD. These are moving average convergence divergences. You don't need to know that. You just need to know, where's my green arrow? You need a green arrow with your MACD. Also, when you have a green arrow with your price chart. And you go, how long do I hold this? Well, until you get the red arrow with the MACD. Folks, we have taken these fancy computerized tools that have tremendously difficult valuations, and I look at all the different data points every day, and we've computerized it to red arrows. Red arrows, get out now. Green arrows, get in now. That's your timing issue. The last arrow we take a look at is we have something called the Cobalt Trend Indicator. It's top secret. This is going to go out there as a stealth indicator among all the stocks out there, and we see what money managers are buying, what they're selling, and we implement this into an arrow for you. So that means when you have 3 green arrows, that means get in now. And when you have, how long do I stay in? Just my $1? That's okay, but maybe you want more because maybe you want to be wealthy because this is your new business. Now that COVID hit and I have to stay home and just learn a skill, stock market will always be here the rest of your life. What direction does it go? Doesn't matter. If it goes up, I make money. If it goes sideways, I'm going to make money because I'm doing the covered calls. If it's going down, I'm going to make money because I'm going to take off my bullish hat and put on my bearish hat. So you can make money in all 3 directions. You just have to learn it. Now, so first thing we look at is on the stocks chart, do we have 3 green arrows or are they red arrows? Let's take a look. Now here's an older chart on Netflix I pulled up because currently it's kind of just going sideways, a lot of chop, but I wanted to show you this, how significant these arrows can be. So what this is saying is, here's a stock Netflix we know just did fantastic during COVID because everybody was home, Netflix binging on everything, and me included. So, but I did have my computer, I had my Apple iPad, and I was trading off that as I would hit pause on Netflix, find a stock, cover call, okay, then go back to Netflix again. Never left the sofa and trading. Now take a look at this, 3 red arrows. The stock looks good at about 370, but because there was 3 red arrows, it's saying wait, just wait. It's not saying it's a bad stock. It's saying it's not the right time. You can't force something. Just like if a woman's pregnant, you can't have the baby in 2 months. It's not time yet. You must wait for the perfect timing if you want this to turn out beautiful and perfect. So we wait and wait as this stock actually dropped from 370, 300, 3.25 to 270. This stock actually dropped $100 because the computerized program said it's not done dropping. You wait, and then bam, now it shows you 3 green arrows. Now you get in this. That's like doing a short sale on a house in a great neighborhood, and you do a valuation, and the appraiser says, don't buy it yet, just wait. So that $370,000 house drops to 270, and then the appraiser says, now it's a time to go in and buy that right now. And that's what these arrows do for you. It takes out the guesswork because you don't have to do this. You don't have to be an expert identifying all these things. You just know how to use the proper tools. We have power tools for a reason, but if you don't know how to use them, they're worthless. So just learn how to use the tools, and then you're set for the rest of your life. Now, this works on the entire marketplace too. I trade, it's called the S&P 500. It's the entire marketplace, which by the way, this morning was crashing this morning, and which is quite exciting, but we had signals. It actually showed it was starting to drop about a week ago. So sure enough, 3 green arrows means, yes, you should be in the market. You should have your investments fully invested in the market. And then all of a sudden, 3 red arrows. And if you go, they're not talking to me. Yes, they are. Because look what happens with these 3 red arrows. That stock that had gone up 9% actually has now dropped 19%. You lost all your gains and some of your principal because you were too lazy just to pull up on your smartphone. We have a smartphone app. Pull up your app and go, I got 3 red arrows. Sell, move to cash. Guys, cash is a brilliant place to be when the market's dropping if you don't know what to do. So it works on the entire marketplace, on the indices. So many people have money in their 401ks. They go, oh, it's doing great. It's doing great. Yeah. But what if your stocks happen to have 3 red arrows? What if your mutual funds have 3 red arrows? Can you rent out your mutual funds? No, you need to change those over to something. Find a great stock that's high quality, undervalued on sale, and then start renting that out. Your 401k will not be in the toilet when you retire. Or you don't have to worry about your kids moving back home with you. Hey, my job's gone. Something happened. Can I move back home, Mom? So, because we all know that we are at about a 42-year high with children. adults in their 30s living at home with their parents. In fact, I know several parents and they have adult children that live with them still because the kids can't get a job that's acceptable to them. And so I said, why don't you teach your kids the stock market? They can still sit in your basement. They can still sit on the sofa. They can just be on the computer, buy, sell, done. And they can pay enough to actually pay their own rent somewhere else, maybe. Okay, this also works on mutual funds. Here's a big one that was huge for many, many years, the Magellan Fund. I just show it because it's probably the biggest one out there, but this works on every mutual fund you own out there. If you have a publicly traded symbol, you can put it into the website and it shows you 3 red arrows. This thing is not headed up. 3 red arrows, get out now. Now, this is for educational purposes. We don't give advice, but as you can see, sure enough, when you have 3 red arrows, just move to cash. Now you have 3 green arrows. Now it's time to get back in. But look at this. From where it told you to step out at 95 and then where it told you to get back in at about 45, that's more than 50% difference. If you own this, your stock actually dropped 50%, which means think about what's in your 401k. Now slice it in half. That's what you'd have if you just held on to it. Oh, the money managers know what they're doing. They do. And that's why they make so much money, the money managers do. But the reality is, I want you to learn how to make money on this. So taking a look, this is one of the best things overall that I have found in this pandemic when people have lost their job. You know, I get so many emails, and so does Mike, from people saying, what do I do? What do I do? Folks, this is amazing because you can never get fired from your own business with the stock market. I used to travel all the time around the world. Now I've been home, which has been great. I'm doing webinars, but my trading has never been better because I get up every morning. Market opens at 9:30 Eastern. I find one stock. You can just move $1 or just 1 point. Buy, sell, done. Now, if you want to make more, of course, there's a good opportunity. That's the best thing about this. If you have lost your job, you know how they say there could be a silver lining? Maybe this is your silver lining. Maybe it's that you say, hey, I can retrain myself in a skill or an industry that's never going to go away. Is the stock market ever going to go away? No. We know the stock market can go 3 directions. It can go up, sideways, and down. If it goes up, you just buy the stock. If it goes sideways, you get really good at those covered calls, really, really good at that for the rest of your life. And if it goes down, we don't ever short stock because it's unlimited risk. We'll show you how to profit as the stock drops. So in other words, no matter what direction the market goes, you're going to make money. That's how brilliant this scale is. You're not relying on somebody else to get you rich. You're not working for somebody else making them rich. You're working for yourself to make you rich. I never liked being an employee because I didn't like working really, really, really hard. Our family has a great work ethic and making somebody else rich. So I always loved the stock market because I never made $1 million working in the brokerage business. I made a very healthy 6 figures, but I didn't make my first $1 million until I started trading the stock market with my own trades in the market by looking at these signals. And what's to stop you from doing the same? So, and it was much harder for me to learn because I was trained. I went to College of Financial Planning. I was trained for investments. So I had to unlearn those ways and learn it the correct way. So if you don't have any experience in the market whatsoever, you might pick this up so much faster than the average person. Now, Vanguard, some of you have Vanguard mutual funds. Works the same way, guys. 3 red arrows, you're out of there. Wait till you have 3 green arrows, and then you're back in overall. The beautiful thing is it doesn't take a lot of cash to get started, actually. In fact, here's Amazon, and this is an older one of Amazon too, just to show you some differences. The stock moved up. Now, some people go, I can't afford a $1,600 stock. Well, I never said you had to buy and own the stock. I said you had to control the stock. So what if you went and controlled Amazon for a fraction of the price, and as the stock goes up or as the stock goes down, you profit from that? So when there's 3 green arrows, we're in, 3 red arrows, we know it's not going up, this thing's dropping. I'm showing you this because when it has 3 red arrows, the average person says, no, my broker says long-term, buy and hold, stay in. Yeah, they don't. I don't know why you don't. they actually, professional money managers sell when it starts to drop. And that's why, in this case, on certain stocks, you might have made something as it's heading up, but as it's dropping, you want to be out of there for sure and just move into cash. So we take a look at, I actually gave one of our students some homework. Now, this is Apple. We all know Apple. Apple's had a really crazy ride recently, and it's gone low to high, back to low again. Now, those are called opportunities. It's called bonus or salary for you. So here we see Apple, 3 green arrows I'm in, up 16%, but then it drops, but it gave you a signal of 3 red arrows. It dropped 27%. So you not only lost all your profits, you actually lost some of your capital because you weren't following the rules. Are y'all seeing how if you follow the rules and do your studying, you're actually going to do okay at this? Now, here's one of my students. She's a newscaster, and I said, Leslie, I said, give me 3 good stocks. So that's what she said. She goes, I want any stock in the cannabis sector because it's really, really growing, or any stock in the broadcasting sector, or a stock, that Botox stock, because I pay so much for Botox. It's time I start making money off that stock. And it's funny because she was so terrified of learning the stock market, saying, numbers confuse me. I don't know. I'm not good at numbers. The reality is, she said, I can't believe you have made it so easy to understand that I get this and it's fun. Now, do you know what fun means in the stock market? It means you're making money. Now, maybe you're only making $400, $500, maybe something like $120, who knows? Or maybe you're making thousands. But my point is, you are now creating income. You are creating wealth out of an industry that will never go away. You can never get fired from. And this has been out there for hundreds and hundreds and hundreds of years out there. So some type of trading out there. So she said, I am hooked. I absolutely love learning from you guys. And this is actually the Botox company stock. So if you know anybody who's ever had Botox before, this is a really good way to pay for your Botox, because here's the company, 3 green arrows, we're in. Stock's up $25. If you had 1,000 shares of the stock, you just made $25,000. Is that enough to pay for at least half of your face of Botox? Yes. Now, sure enough, 3 red arrows. What? I better get out of this. Yeah, you should, because the stock just dropped $195 down to $60 a share. And then, of course, if you be patient and wait for the 3 green arrows, we'll up another $15,000 on your 1,000 shares. That's the beauty of following the timing and not rushing it. You must be patient. Overall, if you just bought and held the stock, you'd actually have a loss. But because you traded, you were patient on the green arrows and out on the red, you actually are up 23%, which is phenomenal. Now, just to let you know, we like to give back. We, like I said, retired many years ago, but we now do this because we got back in the business because we're very good at it. And we realize that some people need an extra help. That's why we teach this stuff. We also like to give away our profits too. So every Tuesday night, we do a trade every Tuesday night for our students to watch and see us do it live in our own personal accounts. And for over 12 years, every week we've given away those profits. Anything we make, we give those 100% to charities that our students actually suggest. Because you know what? If you've been blessed in life with something, then the best thing in life is to go out and bless somebody else. And that's what we are doing by teaching this. You want to learn this? We are very, very good at this. And that's why CNBC and Business Week and Forbes, they all hired us to say, hey, will you please teach our folks how to do this? So with that said, I am now going to give you a test. Who's ready for a test? Anybody? Okay, so let's take a look at this. So here's a chart, great fundamentals. Now I've taken off some of the lines, so you just look at arrows right now. Stock has 3 green arrows. What do you say? Would you buy or would you wait? Would you buy the stock or would you wait? Okay, so we buy. So we're in. Sure enough, the stock, 3 red arrows. Okay, so you got in at 60, you're now out at 65. You made $5 on 1,000 shares. That's $5,000 profit. That's pretty good. Can you do that sitting at home? Buy. Sell $5,000 directly to my checking account. I have my brokerage account linked to my checking account, so I can hit send to my checking account. Oh, look at this. Whoa. The stock came down. Look at this. It tried to break above, couldn't. Slam, slam, slam. Whew. Comes all the way down to about $30 a share. Now you have two green arrows. Two. Do we go in on two? Should we go in before everybody else? Go in on two and make more money? No. Nope, got to have three. We must wait. This is the hardest part, folks, is being patient. Just because you see something you think is going to happen, it hasn't happened yet. You must wait. This is where people have losses because they think they know more than the market. Folks, we are tracking actual buyers and sellers of the high quality stock. If there's a lot of sellers, you stay away because it's still going to drop. You wait until buyers have gone in and start pushing our stock up. That's when you step in on those three green arrows. Now we have three green arrows. Okay, so you're in at $32 a share. You're in, and oh, about a couple weeks later, it says three red arrows. Okay, gotta get out now. So we're in at 32, you're out at 30, you lost $2. Is that gonna happen sometimes? Yep, losses are part of the business. It's going to happen sometimes, but not very often, and we're going to limit our losses. So we'll go back in and three green arrows. Okay, we're in at 32. We're back in now. In at 32. We're in. Poof, stock takes off, goes all the way up to about, looks like $50 a share. You're out at 50. Got in at 32. You're out at 50. That's $18,000 you just made. Three red arrows. And you might go, no, it's not talking to me. Yes, it is. When you see arrows, they are absolutely talking to you. If you don't believe it, stay in and you watch yourself lose money. I'm telling you this out of experience. I tested this over and over and over, and the arrows work. If it didn't work, we wouldn't have been in business for 2.5 decades. So take a look at this. Three red arrows, three green arrows. It says get back in about $50 a share and ride that up until about $60 a share, another $10. Let's see what we did here. Now, this was an entire year and a half. Let's see what happened. Now, let's say you had $100,000 in your IRA or your Roth IRA or your trust account or corporate account or personal account. You had $100,000, but you only used $60,000. You made $5,000 on your first choice, your first trade here. Your next trade, you lost $2,000. It's going to happen, but you're still ahead overall. Your next trade, you made $18,000, and your final trade, you made $10,000. So let's add this up. You only had about $61,000 invested at any one point in time, and you made over $31,000 in profits in a year and a half. A year and a half. Is that more income than the average person makes who's unemployed? Yes. So, and this is only 4 trades in a year and a half, 4. He did this at night sitting on the sofa. Now look at what the stock did. If you just bought and held the stock, it actually dropped. But because you didn't just sit back and wait for something to happen, you took action and said, hey, I'm doing this. You said, hey, buy, sell, 4 times in a year and a half, and you made 31%. You outpaced other money managers. And you did this sitting in your sofa on your PJs. All right, so let's take a look at this. Wouldn't it be great if you could just push a button that says, give me all the stocks that have 3 green arrows right now? Wouldn't that be awesome? Yeah, well, we have it. It says, now you want to look at this every night at about 5:15 Eastern time. And it says, as of tonight, all of these stocks just got 3 green arrows and have the strongest fundamentals. Awesome, right? Because when a stock gets 3 green arrows, it's getting ready to move. So we actually have a search that says 3 green arrows as of today, as of tonight, so you can look at and then enter first thing in the morning. Anybody kind of getting excited here? Because I am. I love doing this. Okay, recap. Step number 1, best quality. Always choose the highest quality. You can never go wrong choosing the highest quality. But you also want to make sure you don't overpay for something. You buy it on sale. Make sure you get a very good price for something, and it should be increasing in value of that worth of what you bought. And buying a great neighborhood. Always make sure you're in a very good sector, that the entire neighborhood's also moving up. If you find like technology started going down, we don't want to be buying technology right now because it's starting to drop a little bit. We want to start buying the ones that are heading up. And timing. We want to make sure we buy it. Wait for the arrows. You must wait and be patient. And this is the hardest one for me because I see something great and want to buy it today. No, you might have to wait 2, 3, 4 days for it to come and actually give you the arrows and then get in. That's the safest way to do this. Now, let's say maybe you had, your $75,000 in your IRA or a Roth IRA. Anybody who's 50 or above, please start a Roth IRA. You need to have it for at least 5 years before it becomes completely tax-free. They're brilliant, probably the last greatest tax haven out there. And as Clint told you, yes, you can convert your IRA over to your Roth IRA. You can do all these different things. Let's say you get 17% for 20 years by just doing a covered call. You find a really high quality stock, maybe it's Bristol Myers or something else, and you just rent it out once a month. You make about 17% a year. You now have $1.7 million. And you go, well, that's still not very much. Okay, let's take your 1.7 million and let's rent that out once a month at 3%. That's $52,000 a month. Now, if you fire the maid, well, just one of the maids, fire one of the maids, use coupons, could you live off $52,000 a month? I mean, I could make it work maybe, but this is the beauty of and you're not stressing. What does the stock have to do? Nothing. I'm renting it out. I know I have a high quality stock. It's on sale, a good value, and I'm renting it. Someone's paying me. And if my stock goes to a higher price, they buy it at the higher price. You have all your cash, you go find another one. This is brilliant. Now, maybe you do this, you go, I'm retired. One of my friends who retired actually in trade the stock market said bought a brand new car because he placed a really good trade in the stock market, actually paid for the car. I said, I wouldn't buy that car if I retired. Give me a break. I'd buy this one. I saw this one in London when I was teaching people from London how to trade our US markets. A bedazzled Mercedes with faux fur seats, convertible. That's how I like to travel in style. Now, my brother, a little bit more down to earth. He likes to travel and he likes to be the big guy on the block. So he's now looking for a driveway that he can actually park this truck in right now. A little bit of a problem. So my point is, we are very good at doing this. And if you want to learn this, we would love to teach you. We have a class. It is not this weekend, but next weekend, March 6th and 7th on Saturday and Sunday. And it is live. And you can pull up any stock you want, any mutual fund you want. And you can take a look and say, hey, how do I put this into action now? Maybe it's you and your child. Bring your children or bring someone who maybe just lost their job, or bring someone that says, hey, I don't like my job anymore, or my job might be phased out by robots now that they're raising minimum wages and raising salaries. Companies can't afford that, so they're going to automate everything. Do this, learn the stock market. Nobody can ever take this away from you. The class itself is $1,499. And then the cash flow, that covered call course is phenomenal. The covered call course is several hours long. It's on DVD, it's recorded. You get that. Mike Koval, the creator of this website, great author, speaker. He actually created this recently. It's fairly new. That's $1,300 and our website's $25. So all this together is $2,900. But of course, Dawn said, hey, my people need to learn this. They have businesses, they're busy people, they have trusts, everything else, but everybody has about 10 minutes at nighttime to hit click, find a good stock, sell, and get a cover call, maybe at 2, 3, 4% a month. Everybody can do that, but you want to learn what are all the aspects, what's every facet to this strategy. And that's what this cover call class is about. It's amazing. It's amazingly detailed. You go through this class, you'll have this the rest of your life. So we're, of course, going to give you the website free for the next 2 months, because if you're going with our class, you can actually get on the website tonight, start looking around, and we're going to give you the covered call course and the class. Actually, the class is free if you buy the covered call course. Amazing. The covered call course is about $1,400. We're going to give that to you for only $997, and you get a free 2-day workshop. We teach you how to find stocks going up, sideways, and down. If you think we're now heading down to a nice overall downward move, that's where where big money is made when the market actually drops. So we teach you how to do that as well. We teach you all about how to find a great stock, how to rent it out. And if you just do this one strategy for the rest of your life, you listen to your covered call course that Mike Koval did, you listen to it 2, 3, 4, 6 times, you got this. You're set for the rest of your life. And this can be done in any type of account. Our live class actually, so $9.97. Yes, we only have 29 spots available. We keep them very small because we want to be able to answer every single question. So this also comes, you're buying the covered call course and you get the class for free, really. So the most comprehensive covered call class out there today. You can also bring a guest to the class if you want, so which is fantastic. And like I said, share this with somebody else. You might be surprised who is really needing to learn this right now, especially with, they're dragging this COVID thing out, and it could be a couple more years they find reasons to limit our income. Well, you know what? When you take control, there's no reason your income needs to be limited. Find a business that you can be in charge. You can be the boss. You don't have to have someone telling you that's the max you're worth. No, I knew I was worth a lot more money than what the brokerage firm was paying me. I was worth more than 6 figures. I was worth 7 figures. So I went to the stock market. That's where I got my 7 figures. I didn't get it overnight. This is not the lotto. There's some work involved here. I had to sit down on my sofa in my pajamas and learn this. I had to watch those videos over and over to learn this, but so can you. Investor Education will give you our website, which is fantastic, for the next 2 months for free for you and your guest to show up. And our class is March 6th and March 7th is when our class is. And it's 11 a.m. to 6 p.m. Eastern time. And it's live streaming. So we will be live the entire time. We're going to bring in some of the top instructors. We'll look at all of your stocks. We'll look at your mutual funds, anything you want. And we'll have you maybe watch that covered call class before, or you can wait till after the class, but you'll see how to really use everything. It's kind of like someone gives you, a new phone. They go, here, you go, okay, well, can you show me how to use it? Okay. And when they show you how to use it, it's so much easier. That's what the class is about. We're going to show you what your daily routine should look like. And maybe your daily routine starts at 7 p.m. to 7:30 every night because you're working still. Or maybe, people who aren't working and need to learn a new skill for the rest of their lives. Maybe your daily routine starts in the morning. So you buy the covered call course at $9.97, which is a steal. And you get to come to the class 2 days for 2 people, and you get website access for 2 people as well. For some reason, if you can't make the class next weekend, March 6th and March 7th, then you can attend the next class we teach. We're always teaching Don's folks, and people have said, you know what, this is a great way to really change my family's legacy. I can now, maybe you put it into a trust, or maybe use Scott Estrell's tax program and have all these deductions as well. It's a fantastic way to have unlimited potential income out there for an industry that can never be taken away from you. It's fantastic. So welcome call. We're going to actually call you and give a welcome call for the next 3 business days. Say, hey, we want to make sure that you and your guest are going to show up to the class wherever you're at. Just get a computer and watch it, and we'll be able to type questions. We'll answer everything you have live, March 6th and 7th. And the website will be available to you probably actually in tonight or the next couple of days or so. And then we'll send you your covered call course, which is amazing. Folks, if you have any money in mutual funds, we'll show you how to go to the website and how to move that money out, put it into stocks you can start renting out, so you can actually start keeping that monthly income now. Maybe you only get 2% a month. That's still 24% a year. Now, just by buying and holding, you don't get that. By buying and then writing a covered call, that's how you start to increase your income. Or maybe some of you want to be aggressive or more conservative. Maybe you buy the whole sector like I just did and then start renting that out on a weekly basis. There's so many different things to teach you here. If you want to attend, fantastic. $9.97, and it potentially could be a tax write-off if you listen to what Don was saying earlier. Don is a wealth of knowledge. Fantastic. And then Scott Estel is probably going to talk about some of the tax advantages of being a trader as well. So if you have any questions, go ahead and type them in. I have a facilitator answering some of the questions. And let's see, anything else you have for us? Don, I see you're on.